Welcome everybody. Welcome to today's daily EOD market recap for 23rd Feb 2017. Today was also the expiry and potential auction paths. Myself Dean, you can get in touch with me on Twitter or visit my website getthattradingedge.in. Softwares used for today's presentation are Bell Market Profile and Bell Order Flow. For more details on the softwares, please visit belltpo.com. Let me go through the disclaimer. Information shared here is not a trading recommendation and we are not a business of providing any. All information shared here is strictly for educational purposes only. Please use your discretion while acting on the information shared here. We will not be responsible for any resulting profits or losses. Please consult your registered financial advisor before you make any trading and investment decision. Let's go to charts, but before that, some construction work is going on in the background, so please excuse me for the noises today. Can't help. Just give me a minute. Sorry for that. Okay, so let's go to the charts now. This is the chart for Nifty. Before we move with today's development, let me just show what happened yesterday. Yesterday was a nice B-shaped profile and B-shaped profile, and we had a few auction paths charted out. Acceptance below this, we were expecting lower prices. One of the option was that prices straight away started moving higher, and that was the option which was selected today. So we started moving higher after open, came down to test this particular high volume area, and since we could not find anything, we started moving higher. The open was inside the value area, so the range expectation for today were not much, as but that is not synonymous with the volatility. The range expectations were not very high. We were expecting a range similar to what developed yesterday. Then what happens is prices move higher. Since they open above this loop, anybody selling in this range were immediately put under pressure, and their covering moved the price higher. We repaired this high, traded above it, and there was a chance of a failed auction in this period, E period, and we also got some follow through for that. But then whenever this kind of a fail auction happens, the first and immediate reaction for us is to try and short the market, and the next logical step is to monitor for continuation. Now what happened here was this early development. Let me just split the profile here, split it here. The early development had this particular high volume node, and prices in G period after this failed auction came down precisely to that level, but then could not find the selling required to push it below that, and that was the point where any shorts, if they had been initiated in this region, had to be either scratched or booked on. Since prices could not find that power to push below this particular level, immediately they reversed and moved higher. So all the shorts that were created in this zone again were made to cover, and then in these H, G and H periods, if you look at the lower time frame charts, there were many a times shorts setting up with delta divergences or pin bars or volume spread analysis setups, all were happening here, and every time a short was justified, immediately the buyers came in and pushed the prices above the stop loss levels and made the shorts to cover. Now that continued till I and J period. In the J period we came down, and then again we moved higher in K period. Now this K period was a poor high, because this I and J action was similar to this F and G or H and I action, which we have been discussing in last video log. But this K period, before that, on smaller time frame charts, we had prices moving lower and again coming back to the same level and failing. So that was a poor high, and this is also a sign of exhaustion in the markets. I had put out a post on Slack suggesting that both Nifty and Bank Nifty were getting exhausted, and whenever that happens, there is a chance of a inventory balancing move which will take out the weak hands, and then the market is left in the hands of the smart money, and they can decide where the market is to be taken. So this poor high exhaustion led to a nice fall in K period. Again we moved higher back, and finally the market was able to break the two levels which I had suggested, the 6-0 and the 4-4 level, and we have closed just around that 4-4 level at 8940. So bears have managed to take out both the lower references, and that opens up the next set of lower references. Let me just clear all this up, merge the profile. Yes, now I can show you the next set of lower references. So anybody buying in this whole up move is put under pressure by this close. Now tomorrow, if we cannot manage to move higher immediately, then all these buyers will be put under pressure to cover, to book out their longs, and they'll be forced out of the market, and we might test this reference for starters, and then lower references in this range and in this range. Now whether this down move is just a inventory balance move and we immediately start marching up tomorrow in the morning itself, or there is some fresh selling is happening in this range and we might go lower and test one of these references, remains to be seen tomorrow. But before we can start expecting that particular scenario to happen, I am not suggesting that you should expect the price action to happen. What I'm saying is that you have to be ready with a couple of scenarios, and one of the scenarios is this down move, and if this is going to happen, then what is the requirement that needs to be fulfilled for this kind of a move to happen? One is to trap one side of the market. That we have done today. We have trapped the buyers, but one more thing which was required was a nice excess at the top. Now we don't have that excess yet. This is a poor high, and a poor high is a sign of exhaustion, not strong other time frame activity happening at the extremes. So there is not a nice sharp rejection at the top of higher levels, and that means that the auction may not be complete to the upside. Does that mean that we cannot go down and test these levels? No, it does not mean that. The only thing it means is that we do not have strong excess at the top, and that means that still there are some weak sellers in the market, and smart money definitely don't want these weak sellers to be on the short side of the market and take the market down, because whenever market will come to an important reference like this one or this one, these weak shorters will immediately start covering their positions either here or here or here, and invariably what it will give rise to is a B shape. So I think now you can understand why these weak sellers in this region are not a good sign for the continuation of the down move, because these guys will start coming in and booking at every important support. Market cannot move swiftly down, and when that does not happen, smart money has to spend a lot of effort. When this kind of action is happening, smart money will have to come and sell here to get this new business. Again it comes to this level, again they'll have to expend effort, again they'll have to expend. So I mean, instead of enjoying this nice down move, they will have to work through this down move, and smart money won't want that. They would like to have a clean nice move down where they just sit and enjoy, and for that they have to flush out any weak players from the market and then take the market in that direction. So one thing I am expecting is maybe not tomorrow itself, but in next few days, for market to go higher, repair this weak high at least, and take out that psychological level of 9,000 and then fail. And in the process, for the next few days, we might continue to build a balance in this region where the smart money can accumulate their shorts. Now this is just a hypothesis from my end. The value is clearly higher, though the buyers are trapped, the value is clearly higher. And if this just turns out to be an inventory adjustment, then we can move up, take out these highs, and if we do not reject and start finding acceptance, then we all know what can be expected. We can expect even higher prices. So that is what is my analysis of Nifty is. One more point I can show is that there are multiple distributions, and these are never a good sign. When there are multiple distribution, it means that after every consolidation, prices were pushed higher, and this is not a smooth kind of a profile to give us any confidence. And that was precisely the reason why this sharp fall occurred and repaired everything. But still the edges remain, so we might need some balancing here, maybe a balancing of couple of days in this range and then take out the top and fail, or just continue this run up which is going on for a while now. Every dip is getting bought into. So that is what I feel about Nifty. Let's go and check out Bank Nifty. Bank Nifty, I had already split up the profiles for you. Let me just draw this nice balance. And what I suggested yesterday was continuation of this particular balance. What happened in the early part of the day was this P profile form, and I was expecting some new business above the top of this P to continue higher, and that happened. We broke out in G period, got some acceptance here, and a nice volume profile developing. But then one thing happened which stopped me from expecting much higher prices. What was that? For that I'll have to merge everything. So I'll merge this profile and split it and show you what I showed on Slack, that this particular D pattern was forming. Whenever this D pattern forms, immediately we know that the value is lower and prices are trying to move away from the value. Also, you can spot this particular small P shape post this nice breakout from this balance. Had this breakout been a successful one, we should have seen higher prices, not this congestion of time periods in this range. This suggested that this breakout was just to push the weak shorts out of the market, and immediately their positions were taken by some smart selling in this region. This J period pushed up, take the last breath, and then the market fell. We have closed below the combined point of control for this whole composite. That is not a good sign. Even for today, we have this B in the initial part, sorry, extremely sorry, P in the initial part, and we have closed below that loop. So all this suggests that uh, that every time the prices went higher, smart money was just coming into the market and selling and selling, so accumulating their shorts. Now what we need is again follow through to this action, follow through lower. Of course we have these references which we have marked in previous posts. So I mean, a P over a P, smart money getting ample time to accumulate their shorts. Bank Nifty might actually move swiftly down. But one more thing is an important aspect of auction market theory or using market profile is always keeping an eye on value. So what does value tell us? Firstly, that this whole range of acceptance is still above this uh, low usage area, so higher prices are getting accepted. The only point of concern is this balance. This is the second balance which happened. You can see a nice balance on volume profile also, and that was rejected. Whenever we see balance forming and it getting rejected, then it is a sign that maybe the smart money has accumulated its shorts, and now there is very little interest to the upside, and we might start moving lower. One more thing that points to it is albeit small but still a tail at the top and nice gradient on the volume profile. So these things help us put the give bears a little bit more credit for today's action and expect the lower prices tomorrow. One more thing that can happen is we can come up tomorrow and test this particular high volume node and then fail. That would be even better if this can happen. But of course, as always, this is the area where smart money is supposed to have accumulated their shorts, and if we start trading above it and accepting, then definitely these guys will be put under pressure and we might see higher prices. So I think that is what I feel about Bank Nifty. There were today was an active day and there were many questions. So let me just go back and see what those questions were. First is from RP2100. I don't know your names, so I'm just reading out from the whatever user ID you have provided. Pardon me for that. So the question was, what is the criteria or conditions to be checked to confirm that the auction could not find business above yesterday's high? Okay. So let us first check that out. For that, we might need to look at the order flow chart, and let me just mark yesterday's high here. Oops, no, not this one, this one. Okay, so this was yesterday's high, and this was the first attempt to reject above the yesterday's high. Now the first signs can be one that you get some buyers trapped at the top. This is generally happens when there are stop losses beyond a certain level and those are hit, and then we do not find any new business to continue higher. But that happened here, and we also came down. We got some strong selling here, but then we could not follow through. This VWAP was tested here, but that's not very important. What was important was this particular price level, this one. This was the high volume node for the earlier development, the initial value which was being formed during the initial balance, and that particular high volume node could not be taken out by the market after this particular rejection happened. So Signs were these: the trap buyers, and this trap again, a single trap big order buyer, and some heavy selling coming in. You can see here this particular seller was huge, these two sellers were huge. But then what happened was, since we could not gather any follow through, these were the sellers, these were the very sellers which fueled the prices higher. Why? Because they then had to cover their positions, and their covering, push the prices higher. Let me see. Yes, so all these sellers were forced to cover in these bars here, 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 here. So all these, big buy numbers are actually these sellers trying to get out of their positions. So one more actually point was there. Let me see if I can find it. Oops. Yes. Where was that? Where is that? Okay, this is today. Oh, I think it was on 3-minute chart. Sorry, my bad. Let me just go and check on 3-minute chart. Yes, this one. So this is 12:25. Yes. Okay. Yes. This is that fall which we are just looking at, failing above yesterday's high, coming down, and see what happens. Another, sign of not, finding new business is this kind of activity. Look at the sellers dropping in number as we go down. Here also, here also, and here also. Also, you can see is the last, number in all these bars. If you compare this 5,100 and 9,900 to mere 150, just look at this number. This small number 150 suggests that seller interest was dropping sharply as market or auction was exploring lower prices. So this is another sign. This many a times happens at the tops also. Lack of interest, and that is another sign which tells you that okay, the market is not ready to move in that direction, and it might reverse. What was the reference here? This VWAP was here. Just below the VWAP, if you see this kind of activity, it suggests that uh, sellers are not interested, and buyers might soon resume control of the market. Also, you can see these big heavy selling numbers here, and such heavy selling happening, not able to push the prices below the VWAP, another sign that sellers are losing control. So that was the first question. What was the second one? Absorption here is shorts are being absorbed by the longs and chances of going higher. So K Palania, if I have got that right, let's just go back to the chart and let me show you where he asked this question. He asked it around 11:16. So somewhere around here, he was asking that question just near the previous high when the first time we came here. So what was happening was, prices one time framing higher, and when this kind of activity happens, don't look at what happened after F period, just look at before that. See what is happening here. Every time, price reaching in this zone, there is some sort of a selling happening, but we are not able to take out the lows of the previous bars. Sometimes it happens that the bar, next bar will come, like E might come to this level and then move higher, again come to this level. So this kind of activity, what it ultimately leads to is a nice small balance forming just below an important reference. And when that happens, like after this E period rejection, what we should have seen is immediate taking out of this lower reference. Sorry, lower reference, and then continue the move lower, but that did not happen. And that was the sign, which said that whatever activity which was happening in this region was actually absorption. Now you might not get this kind of a follow through like in F and early G period after this potential failed auction happened. Sometimes it happens that you just consolidate here for a while and immediately zoom high. So that kind of action did not happen. First we came down, tried to go below this high volume node, could not do it. A nice setup. uh, Generally around these kind of high volume nodes, I like them because they provide you nice entries, and market immediately zoom. Now we did not go 100 200 points from here, but I also have that particular trading style where I avoid getting into too long term a commitment. I try to trade them intraday, try to get into some good risk reward scenarios, and try to extract few points from the markets every now and then. So that was the second question. What was the third? Yeah, it it went below 8960 twice in last 30 minutes and bounced back. Okay, let me show you when this happened. This was happening in this region. Let me just zoom it a bit. Mark 8960, which is here. And what he's talking about, extremely sorry, who was that? It was Sandeep. Okay. So Sandeep, this was 8960 level. We came down below it in J period, and again we came down below it in K period. Now what he is talking about is this particular high volume node around 8960 when this was happening. Also 8955 was the VWAP for that particular time. So high volume nodes are not something where you see immediate rejection every time. What happens is that price come into that zone, and when the smart money sees that price has returned to that zone, they have a choice whether to defend their earlier decision, or sometimes it so happens that they might have exited beforehand and then they fail to protect that particular level. So smart money, like in today's case, if we have to do it in the hindsight, I would say that smart money accumulated their longs in this high volume area, in this high volume area, then we moved higher, and then when this particular exhaustion was happening, it was because some of the players were booking profits. Now the smart money in today's context may not be so smart in the long term, but today the players who were in control were accumulating in this particular areas and then exiting in this region. So or maybe these were short term buyers buying, and this was the area where smart money came and offloaded their shorts into this short term buying. So all this kind of a game is happening in the market, and you have to be very aware of what market is trying to do at different points in time. And when it came down first time and even second time, it came first time actually it came down in J period and then also explode in K period. uh, Both these times what happened was either in hindsight I'm saying, because I had shorted in this IJ period exhaustion, and I covered around this high volume node. So but later in the day the price has actually closed below the lower high volume node. So what happened, what may have happened was, when it came down in JNK period in this region, momentum buyers came in and said that okay, this is a nice support, let's just buy, and the market might resume its journey upwards, and which was actually confirmed by this K period going all the way up to this I and J period high. But when it failed again here, that was a sign that okay, these buyers were momentum buyers. Prices moving higher from here, it's not possible to tell whether these smart traders, or if they were present here, are defending this area, or it's just momentum traders coming back and these smart players have already exited here. So we don't know that. But when this kind of a exhaustion happens, that if this was smart money, why they should have taken out this high and moved higher. But if they cannot move higher and fail at the exact uh, price of previous high, pivot high kind of a thing, then it is a sure sign that okay, these are not neither these are not smart buyers, neither of these, and actually smart money is entering on the other side, and that led to this sharp fall second time in the day. And this time it managed to close below even this high volume node, so it does take some action into next trading session, that is tomorrow. We'll have to monitor what happens tomorrow in this range. So I think we have gone longer than what we do normally. uh, I hope I have answered the questions. If not, please do enter it in Slack again, and give me an opportunity to answer them. But I think I'll stop here today, and we'll meet tomorrow. And there is a question answer session scheduled this Saturday. So I request all of you to visit belltpo.net. I'll put it in Slack. Please visit belltpo.net and register for the Saturday's question and answer webinar, so that we can discuss all these points in further detail. I also request you to put in your questions in Slack for the Q&A webinar, the more detailed ones, so we can answer them and give them appropriate time and do justice to those questions. So that's all from my side today. We'll meet tomorrow. Thank you for listening.